A very warm welcome to the Booms and Bust Show. Good morning, good evening, good afternoon. My name is Jonathan Davis. Today is Monday, the 26th of March, 2018. We're at the end of the first quarter in the markets, and that made me think that I haven't been doing my duty, shall we say, in recent weeks. I've been spending a lot of time on political issues which were absolutely essential without a shadow of a doubt. However, here we are towards the end of the quarter, an ideal time to get back on track and talk much more about economics and markets, which will be the focus for today's show. You should also know that I'm off on my holidays on Thursday, so I won't be back for 2 or 3 weeks. It is Easter after all, so I look forward to seeing you again in April sometime. No doubt I'll let you know on Twitter when that will be. Just on Friday there, I think it was, I sent out the March Booms and Busts report that I publish every 2 months. It talks about economics and markets. It puts a lot of meat on the bones. And a number of you have contacted me to jd@theboomsandbustsshow.com. Again, jd@theboomsandbustsshow.com. Just giving me their email address and their name, first and second name, and they're on the list, and they are now receiving the Booms and Busts reports every 2 months. I can guarantee if you do contact me to get the report, you will never be junk mailed. I would say to you, if you are building your retirement funds, if you're just even starting to do so, or indeed you're approaching retirement, or even in retirement, you want to be reading the Booms and Busts report. They're totally free. You can't get any better value than that, therefore. This weekend we changed the clocks, spring forward and all that, and that reminded me of something I read some time ago about how the seasons work in the UK, and I know Brits particularly will like this. January, cold. February, very cold. March, still cold, but sometimes snow. April, rain. May, more rain. June, why is it still raining? July, bees and mosquitoes. August, oh God, it's so hot. September, I miss the heat. October, what does heat mean? November, cold. December, cold, but with lots of cronyism and shopping and spending money. Those are the seasons, listener, in the United Kingdom. Right. Serious matters. Quick look at reverberations, shall we say, with regards to Telford and almost entirely Islamists grooming our girls and then raping them, mass raping, drugging them, beating them, even murders. This is what the Socialist Party tweeted. Their handle is @official_SPGB. Socialist Party of Great Britain. Britain's, quote, worst ever, unquote, child grooming scandal with up to 1,000 girls, some as young as 11, abused in Telford. Quote, these girls were treated as sexual commodities by men who inflicted despicable acts of abuse, unquote. Vile capitalism produces vile exploitation. As one of my mates on Twitter quite rightly tweeted in response, R, stop, U, stop, stupid, stop. This evening on Channel 4, Dispatches are doing a programme, an undercover documentary on Islamist extremists, Mend. Mend is an organisation which tackles Islamophobia. And you can find easily on Twitter or Google, I imagine, Nasreen Shah and Baroness Varze. Shah was the one who told the Rochdale girls to shut up. They were photographed at a meeting of Mend some while ago. I suspect they will not be in the programme, but certainly something to look out for. Now we move on smoothly, I'm afraid to say, to anti-Semitism in the Labour Party. So let me start by reading you in full the letter from the Jewish Leadership Council to the Labour Party. Today, leaders of British Jewry tell Jeremy Corbyn that enough is enough. We've had enough of hearing that Jeremy Corbyn, quote, opposes anti-Semitism, unquote, whilst the mainstream majority of British Jews and their concerns are ignored by him and those he leads. There is a repeated institutional failure to properly address Jewish concerns and to tackle anti-Semitism, with the Chakrabarty report being the most glaring example of this. Jeremy Corbyn did not invent this form of politics, but he has had a lifetime within it, and now personifies its problems and dangers. He issues empty statements about opposing anti-Semitism, but does nothing to understand or address it. We conclude that he cannot seriously contemplate anti-Semitism because he is so ideologically fixed within a far-left world view that is instinctively hostile to mainstream Jewish communities. When Jews complain about an obviously anti-Semitic mural in Tower Hamlets, Corbyn, of course, supports the artist. Hezbollah commits terrorist atrocities against Jews, but Corbyn calls them his friends and attends pro-Hezbollah rallies in London. Exactly the same goes for Hamas. Raed Salah says Jews kill Christian children to drink their blood. Corbyn opposes his extradition and invites him for tea at the House of Commons. These are not the only cases. He is repeatedly found alongside people with blatantly anti-Semitic views, but claims never to hear or read them. Again and again, Jeremy Corbyn has sided with anti-Semites rather than Jews. At best, this derives from the far left's obsessive hatred of Zionism, Zionists, and Israel. At worst, it suggests a conspiratorial worldview in which mainstream Jewish communities are believed to be a hostile entity, a class enemy. When Jeremy Corbyn was elected leader of the Labour Party, Jews expressed sincere and profound fears as to how such politics would impact upon their well-being. Our concerns were never taken seriously. 3 years on, the party and British Jews are reaping the consequences. Routine statements against anti-Semitism, quote, and all forms of racism, unquote, get nowhere near dealing with the problem. Because what distinguishes anti-Semitism from other forms of racism is the power that Jews are alleged to hold, and how they are charged with conspiring together against what is good. This is not only historic, or about what Jeremy Corbyn did before being party leader. It is also utterly contemporary. There is literally not a single day in which Labour Party spaces, either online or in meetings, do not repeat the same fundamental anti-Semitic slanders against Jews. We are told that our concerns are faked and done at the command of Israel and or Zionism, whatever that means. that anti-Semitism is merely, quote, criticism of Israel, unquote, that we call any and all criticism of Israel, quote, anti-Semitic, unquote, the Rothschilds run the world, that ISIS terrorism is a fake front for Israel, that Zionists are the new Nazis, and that Zionists collaborate with Nazis. Rightly or wrongly, those who push this offensive material regard Jeremy Corbyn as their figurehead. They display an obsessive hatred of Israel alongside conspiracy theories and fake news. These repeated actions do serious harm to British Jews and to the British Labour Party. Jeremy Corbyn is the only person with the standing to demand that all of this stops. Enough is enough. Board of Deputies of British Jews, Jewish Leadership Council. Never in my lifetime have I seen an international recognised religion which has its own country right to a national opposition or in power political party in a first world country with something like that. And either have you, listener. That's how bad it is for Jewish people in the United Kingdom. In the day after we read in France, a Jew was murdered and burnt by a Muslim for being Jewish. France has the biggest population of Muslims in Europe. All over the BBC, but of course not the headlines, even though this should be the biggest story of the week, never mind the day. The BBC is saying that Jeremy Corbyn is sorry, no, in fact, quote, sincerely sorry for the pain, unquote, caused by anti-Semitism within the Labour Party. Hold on a minute. Wasn't Shami Chakrabarti, wasn't she the one, big on freedom, big on liberty, big on liberty, big on equality, big on anti-racism, Shami Chakrabarti? Didn't she write a report which said there is no anti-Semitism in the Labour Party? What's he apologising for? Chakrabarti, he made a baroness. The campaign against anti-Semitism, Twitter handle @antisemitism, reports that last week there was an anti-racism march in Glasgow, not anti-Semitism, anti-racism. And there were chants by a large group shouting, quote, victory to the Intifada, unquote. The campaign against anti-Semitism has rejected Corbyn's attempt to escape responsibility by apologising. Today, literally today, it has emerged that Corbyn signed up to a third anti-Semitic Facebook group for the third time in just 2 weeks. He's been exposed as a member of a Facebook group used to propagate vile anti-Semitic material. Listen, listener, on the 8th of April at 2 o'clock, they have a demonstration, what they're calling a national stand against anti-Semitism in London. To register for updates on the venue and to hear about who's speaking, go to the website antisemitism.uk /J'accuse, JACCUSE. Jewish Labour councillors say, quote, it has become impossible to operate as a Jewish councillor, unquote. Moving on to the privacy issue, Facebook, and this nonsense that Cambridge Analytica got Trump elected. Fact. Clinton spent a multiple of what Trump spent on analysing social media data. Fact. Obama started it. The idea of marketing politics and elections on Facebook was brought to the UK by the US political consultant Jim Messina, the campaign manager of Barack Obama, in 2012. Tory officials at the time liked to say that he boasted to them that he had, quote, 1,000 pieces of data on every voter in the United Kingdom, unquote. This is what Steve Jobs said way back in 2010 when social media was only getting going. Twitter only started, I think, 2006. Privacy means people know what they're signing up for in plain English and repeatedly. I'm an optimist. I believe people are smart, and some people want to share more data than other people do. Ask them. Ask them every time. Make them tell you to stop asking them if they get tired of your asking them. Let them know precisely what you're going to do with their data. Unquote. He got it. He saw what was coming. Matt Johnson on Twitter says, oh wow, my deleted Facebook zip file contains info on every single phone, mobile call and text I made for about a year. Cool, totally not creepy. Someone else tweeted, how much do you think Google has on you? Your every thought typed into search, emails, calendars, GPS locations and trips, habits, probably some documents and spreadsheets, contacts, third-party websites visited via cookies, photos, etc. Did people already not know this? I urge you to Google the following lady, Zeynep, Z-E-Y-N-E-P, Tufekci, T-U-F-E-K-C-I. Google Zeynep Tufekci TED Talks on YouTube and watch the 22-minute video, We're Building a Dystopia Just to Make People Click on Ads. If you go to the Twitter account at Boom's Bus Show and you see the pinned tweet, you have to find the pinned tweet of this particular podcast. Scroll down, retweet, falling numbers of people retweeting. You'll see pictures and photos that I'm using in this show. There is Bono, your loveliest lefty. How much is he worth now? What would you guess? Is it only £100 million? Or maybe it's £200 million or more. He's aligning with big social media tech companies, and he's putting forward that big data will save politics. When was that? Can't quite see, but it was a few years ago. This is Bono. We know about this guy already, though. We already know. We've also had, what's he called himself? His stage name is Count Dacula, Glaswegian guy, you know, who taught his pug dog to push the hand out when someone says "Seek Heil." He's been prosecuted for hate crime, while of course hundreds and hundreds and hundreds of mass rapists go free, or they hold these placards, Intifada, ISIS, the ISIS flags. They chant death to the Jews. You know what they chant. And this is not hate crimes. Margaret said something amazing about this, because free speech after free markets is our most fundamental need. And we're losing free markets and we're losing free speech. Margaret Thatcher said, "Those who use this country's great tradition of freedom of speech should not seek to deny that same freedom to others, especially to those who, like Mr. Powell, Enoch Powell, spent their war years in distinguished service in the forces." People hate Enoch Powell. They don't really know why they do. But I'll tell you, everything he said is coming true. Of course he exaggerated rivers of blood. He didn't mean rivers of blood. Go and watch or read the speech. But I'll tell you something that the vast majority of people, whether they like or hate Enoch Powell, don't know about him. How many hundreds of years of history has the British Army had? There are two people in the history of the British Army who joined as privates and left as generals. Enoch Powell was one of those two people. Men, I meant to say. Great, great man. Incredible intellect. Incredible integrity. Incredible moral compass. He would really think through issues and get to the heart of the matter, and not pretend, not play on the margins, which is what politicians generally do, and the media certainly does. As I say, they always talk about herring rouge, red herrings. Right, let's move on to economics and markets. Let's start with something to do with business first of all. Uber and Waymo, which is the technological equivalent of Uber, owned by Alphabet. Alphabet, by the way, is the holding company that owns Google. Did you know that they are already sending truckloads up and down America's highways without drivers? It's not the future, it's the present. They're using this technology in Arizona and Atlanta every day. I guarantee to you, within 5 years, there will be driverless trucks in the UK. And I can almost guarantee to you, and I think it's a fairly safe bet, that there will not be a truck with a driver in the UK in the year 2028, 10 years from now. And you've got the likes of Douglas Carswell, Pippa Malmgren, and what's the other one I was thinking of? I can't remember. There was a third well-known commentator, politician, economist, I can't remember, who keep telling us that technology will get rid of lots of jobs, but lots of jobs, just like in history, will be found. Well, I keep finding example after example where there'll be mass layoffs, and I'm struggling to hear where the jobs will be. Take, for example, I read recently about flying driverless taxis. They're already being used in Dubai. Shall I repeat that? There are flying driverless taxis in Dubai right now. So that means that within a matter of years, there will be no taxis with taxi drivers. Then look at self-service, takeaway restaurants. You know the brands I'm talking about. They've already been installing massive screens, like massive tablet computers, where you make your orders and then someone hands it to you. So that's already got rid of people. I would say to you, within 10 years, or maybe within 5, there will not be a member of staff in a fast food joint. Then look at how the number of counter staff are going by the wayside in supermarkets. I would say to you, within 5 years, there will maybe 2 across the whole store, helping people tot up their purchases. And of course, there used to be how many? Probably 100. I would say to you, in what I've just said there, trucks, taxis, fast food, and stores, I would say to you, in Britain alone, that must account for, let's say, 2 million people. Tell me where those jobs are going to be replaced. I reckon we're looking at hundreds of millions of jobs lost in the Western world and in the likes of the big manufacturing concerns in China, Vietnam, South Korea. Hundreds of millions of job losses, and nobody's talking about it. And in fact, when they do talk about it, they say, oh yes, but new jobs will be found. It's always happened in history. I don't buy it. The dystopian future, folks, is coming, and that's why you need the likes of the Booms and Bust Show to get ideas of how you can boost your own retirement and financial security. So we've got now the first non-stop scheduled flight direct from Australia to Britain this weekend. Perth, Western Australia to Britain, 17-hour flight. Isn't technology amazing when it works? And there's no question that this will create more travel to Australasia. Of course it will, and rightly so. And yes, that means more planes, more air stewards and stewardesses, more pilots. Okay, there's some jobs. Tiny numbers, you know it. But the fact is, not so long ago, you and I, we couldn't travel to Australia without basically staying there for practically ever. But now, it's a holiday. Welcome to capitalism, listener. Welcome to free markets, which is capitalism helps the people. And if a few people get to be billionaires in the process, great stuff. Steve Jobs, Bill Gates, well done on becoming so unbelievably rich, because you know what? You helped us to increase our wealth. Socialism impoverishes the people and enriches the elite. And this is what people who support socialism don't get. And it sounds great, socialism. Of course it does. It sounds great. But in practice, we know it never works. And when the socialist says, ah yes, but it's never been tried, mute them immediately and just laugh and say bye. Or block them, to hell with them. And if it's to your face, just laugh. There's some charts here. You know what the GDP per capita in US dollars was for Iceland 30 odd years ago? Well, I'll tell you, it was about $13,000 per capita. 30 odd years later, bearing in mind what our per capita GDP is, I would imagine it's something like $50,000, something like that, maybe 60. Iceland is $96,000 per capita. I remind you, listener, that Iceland was the only country in the world that jailed its crooked bankers and didn't make the people pay for the fraud that took place. And since 2009, their GDP per capita has soared from 40,000 US dollars to 96,000 US dollars. Quelle blooming surprise. Bring back capitalism, help the people, not help the elite. And by the way, free markets and capitalism is our absolutely first fundamental need, our right, whatever. From that, everything else flows. Freedom of speech, freedom of religion, law and order, and prosperity, and great standard of living. But there is not a political party in the UK which gets that. Very interesting chart of the currency cross between the Chinese yuan and the US dollar. I'm looking at October 2017. Yeah, that's where it is. In October 2017, you could get, I'm trying to read it, it's very difficult to read, 6.7 yuan for a dollar. It's now 6.25, which means that the yuan has strengthened against the dollar. And I use the dollar as a proxy for Western currencies. So it's the Western currencies compared to the yuan, because the yuan, obviously, the Chinese export more consumer goods to the West than any other country. I think I'm right in saying that Germany exports more industrial goods than any other country, just for reference. So what that the dollar has gone down from 6.7 to 6.25 in the matter of a few months against the yuan? Well, if the yuan has got more expensive, it therefore means that we spend more to buy stuff from China. Thus, China is exporting, you got it, inflation. So whenever you see a reference to the yuan or renminbi rising or falling against a Western currency, normally the dollar is what you'd see. If the yuan has gone up, inflation. If the yuan has gone down, deflation. You want to read the Booms and Busts report, listener. You really, really do. Send your email address to jd@theboomsandbustsshow.com. It's there in black and white. You can get it on an email. But we're in inflation. And I'm just thinking there as I'm saying that, some people wonder the difference in the yuan and the renminbi, and essentially you should look upon it like the pound sterling. So yuan, renminbi, that's all you need to know. Next chart is import volume growth in the world in black, emerging markets in orange, I think that is, and advanced economies or developed markets in blue. And quite simply, global trade is in the middle of a synchronized upturn in the real world. You can listen to the doomsayers as much as you want, Zero Hedge, Peter Schiff, the bloke who calls himself Bubble, all the newsletters that you can think of. Stop reading them. Stop going to their websites. They're wasting your time, and my God, they might even be taking your money. They've rarely been right, and they've rarely been helpful. The global economy is basically okay, and it's certainly in uptrend at the moment and has been since 2015. You will have heard, as I have said many, many times, that global interest rates are rising. And no doubt you've heard some doomsayers say, global interest rates are rising, we're going to hell in a handcart, we are all going to die. Do you remember Indiana Jones said that? Okay, I'm in the business of investments. That's what I do for a living. And other things to do with that. But in essence, that's the primary function, to grow people's wealth in financial assets. And this is the reality contrary to supposition, expectation, or just they want to sell newsletters or clickbait. Interest rates rising are actually a good thing for the stock market. The table there shows you the 23 periods dating back to 1962, when we were in a period of rising interest rates. There are only 4 periods when stocks or the S&P 500 fell, which means 19 out of 23, the S&P 500 rose. And of the 4 periods that stocks fell during a period of interest rate rises, one of the periods, 22% fall. No question, a serious fall. But the other 3 periods were minus 8%, minus 3%, minus 1.5%. Relatively inconsequential in the scheme of things. The median duration for interest rate rises was 8 months, which means 50% of the time interest rates rose for longer than 8 months, and 50% of the time interest rates rose for shorter than 8 months. In the periods that interest rates rose, the median rise in the stock market was 3.8%. And as I've just said, 19 out of 23 periods, 83%. So, don't listen to the doomsayers. The table's there for you to look at. Now, you'll recall that I ended the podcast quite abruptly last week because I ran out of time. I went significantly over an hour. It's an hour-long show. And some of the stuff that I'm presenting today, actually, I wanted to present last week. So I'm doing so today because it's still entirely valid. I've posted a chart of Gazprom, which is the massive energy company in Russia, and its stock price. It's a monthly chart from 2003 to date. Well, okay, a week ago, and it shows, interestingly, that the 8-month moving average is above the 21-month moving average, which is a bullish sign. Secondly, the price is nudging the upper horizontal resistance line. It has done so 3 times since the beginning of 2016, and it's still in a horizontal trading range. But look how far it's come down since 2008. The price has come down from $32 to $3.50. It's currently, or a week ago, at about $5. I tell you, you watch Gazprom. If that price breaks that upper trend line, that horizontal line, first of all, we'll see a multi-year bull market in Gazprom. Secondly, we'll see a multi-year bull market in global energy stocks. Thirdly, we'll see a multi-year bull market in emerging markets stocks. Such an important stock to watch. In fact, I wrote about energy stocks quite a lot in the Booms and Busts report. Just as an aside, a totally separate issue, you'll have noticed recently that particularly high-end London property prices are down, rents are down in the UK. Not much. I'm not saying there's been a crash, there hasn't been, but there is definitely a lackluster market and prices are trending down very, very, very mildly. But it's not like it was a few years ago. And of course, everyone is dog lies through their teeth and says it's because of Brexit. Well, let me tell you, listener, Australian prices are also falling, as are Canadian. Brexit. From The Guardian, London property prices fall as much as 15% as Brexit effect deepens. Total, utter lies. Now, if you follow stock markets, you'll have seen that prices have been down. They peaked at the end of January. They went down sharply. They went up. They're down a bit. Okay. Well, let me tell you a number of facts. First fact. In January, the S&P 500 was up more than 5%. It peaked around something like the 26th or 27th of January. And it went down a bit, but the rise in the first 4 weeks of January was so that net on the month, the S&P was up more than 5%. 12 times in the history of the S&P 500, the January index has been up more than 5%. 12 times. Do you know what? In each of those 12 times, you've never seen a full year negative on the stock market. So when you, in previous times, 100%, when you shoot off the races, shoot out the gates like the greyhounds, and you get more than 5% in January, which we did this year, the 12 times before, we've never had a down year. Fact. Last week, the S&P 500 was down more than 2% on Thursday and Friday. Do you know what? It only happened 6 times before that. Thursday and Friday there was the 7th time ever that we saw more than 2% fall in the S&P on Thursday and Friday. Of the 6 other times, 5 of them saw the S&P 500 higher the following week. So that's this week. Let's see what happens. In one of those occasions, it was actually the 1987 crash. So anything's possible. But historically and probability-wise, we're more likely to see the close at the end of this week higher than at the beginning this week. I've got this brilliant couple of charts to show you. The first one I'm showing you there are lots of squiggly lines, lots of colours, and what they actually represent is all different time periods for moving averages, whether it's a 20 moving average or a 100-day moving average or a 50-day moving average or a 200-day or a 500-day or whatever, but that's what they represent. The right-hand chart is Well, yellow is the peak in 2007. October 2007, that's the peak of the S&P 500. And look at how the moving averages are all getting more and more squashed together as you approach the peak. Ultimately, a year and a half later, the S&P 500 was down 56%. That was what we call a crash. Now look at the left-hand side. This is close of play on Friday, March the 23rd, 2018. Do you see the moving averages getting tighter? No, they're getting further away. There is zero resemblance between what we saw in October 07 and today. Zero resemblance. This is the big picture in the stock market. If we were seeing resemblance, then I would be the first to say to you, uh-oh, we've got problems. Talking of which, look at the next chart. This is the last few months in the S&P 500. You see the peak at the end of January that I've just been talking about at 2870. Couple of weeks later, it went down to 2532. It's mentioned just under the orange line on the right-hand side. So it went down 10 or 11%. Entirely normal behaviour for a bull market. It went up 20 or 30% in 2017. Or since November 16, it went up 25 or 30% to the end of January. So it should, why wouldn't it go down 10%? It then went up to 2800 and then closed of play on Friday, 2590, 2588. It's entirely normal behaviour after a sizable correction in a bull market for the market to retest the low, 2532. There'll be lots of people out there who, if we see this week, and I wouldn't be surprised if we do, if we see the index go below 2532, there'll be vast numbers of doom and gloom sayers telling you, get out, sell everything. Like we saw in early 2016. When the market had gone down 15%, that's when they told everyone to sell everything. That's when I started to move into risk-on assets in a much bigger way than I had been for 2 or 3 years in early 2016. I can show you on paper if you really want me to, but you'd have to do it in my office because it's proprietary. I wouldn't be surprised to see the price go lower than 2532. Why? Because the big boys, JP Morgan, Goldman Sachs, Citibank, HSBC, Barclays, the big boys, the big traders, the big money, the smart money, they're going to push that market down. And when it gets below, they'll see everyone and his dog saying, sell, 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 it's broken the low, we're on the way down. And when they see everyone capitulate, that's when the smart money will move in hand over fist and rub their hands with glee and scream, lovely jubbly. And they'll fill those Berry Brothers wine bars in the city and they'll order champagne. Because they'll have done it yet again. The weak hands will have been pushed out and they'll be cleaning up. Because that's what this city does. And by the way, when you see the prices down there, you watch the news, the radio, the press. Oh, it's dire, we're all going to die. What's the definition of a bull market, listener? Prices going up? That's not the definition of a bull market. No, the definition of a bull market is that the price peaks, it pulls back, it rises again to a new higher peak. It pulls back, but it pulls back to a higher trough. In other words, higher than the trough we'd had in the original pullback. For example, gets up to 1,000, goes to 900, goes to 1,100, goes to 1,000. We've got a higher high and we've got a higher low. Now actually, that in itself is not the definition of a bull market. What we need is a series of higher highs and a series of higher lows. That's the definition of a bull market. If we see the price of the S&P 500, the FTSE, whatever it is, go lower, and in this case 2532, well, what we will have is a lower peak and a lower trough. We need a series of lower peaks and a series of lower troughs to have a bear market. No question. If it goes lower, then we watch it. And it's certainly questionable. We wonder what's going on. But if it goes lower and then turns back up again, goes its merry way, I can tell you it is a fake. It is a failed breakdown. And from failed moves normally come fast moves in both directions. And think on this. Markets don't peak on depression. They peak in euphoria. Only once since May 2017 have we seen weekly inflows to US equity funds. So think about that. We're seeing people week after week after week after week take their money out of the market. If they thought the market was going to go up, they'd be leaving it in there and adding to it. There is nothing euphoric about these markets. Nothing euphoric at all. Another point on this is that global equities, the next chart, the 52-week, the year-long number of new highs less the number of new lows is minus 17%. In other words, there are more new lows than new highs. And what we see, if you compare it to the global stock market in black there, you can see that when the orange line gets low, that tends to be the low point in the stock market. Right, I'm moving on to quotes of the week because, again, I've run out of time. I had more to talk about specific markets. I haven't got time. I will just very quickly say this. The pound has been doing well. I've been bullish for the pound for a year and a half since that numpty carnage cut the rate. The pound went down. That's when I turned bullish. And we're now above 140 against the dollar. And we're above 115 or so against the euro. The pound is doing very nicely. We should have much better holidays this year. Firstly, on quotes of the week, Senator Rand Paul from Kentucky, probably the most admirable free market capitalist politician in America today. I heard him on television say the following, and he's so right. This is why people are so upset with politics. Because when the Republicans are out of power, when they're in the minority, they are the Conservative Party. But when they get in the majority, there is no Conservative Party. Ain't that the truth? And it's exactly the same in the UK. Free press. Albert Camus. A free press can, of course, be good or bad, but most certainly without freedom, the press will never be anything but bad. And finally, from Warren Buffett. I call investing the greatest business in the world, because you never have to swing. He's talking baseball metaphor. You stand at the plate, the pitcher throws you General Motors at 47, US Steel at 39, and no one calls a strike on you. There's no penalty except opportunity lost. All day you wait for the pitch of the ball that you like. Then when the fielders are asleep, you step up and hit it. The point being, look for assets which have already crashed or even better, collapsed, but they're a brilliant fundamental story behind them, and just buy them and wait. Listener, I'll see you in a few weeks. Please retweet. Please rate on iTunes. Please tell everyone about the podcast. I've had a blast. I'll see you another time. Bye.